Hi, and welcome to this month's Trade Floor Update. Today I'm joined by Portfolio Manager Aditya Thacker.
Great to be here.
Aditya, given the recent easing bias of central banks globally, do we expect global yields to trend lower, or could we potentially see some upward movement from today's levels?
Yeah, certainly given the size of the rally, given what's priced in, it's very reasonable to ask whether we are due some form of retracement. And in recent weeks, the bond market has been trading in a period of consolidation, and there's been some signs of exhaustion in the rally. But I would really caution investors and clients to not overly focus on tactical trading and trying to time the market. It's almost like you're looking down and have all your attention squarely focused on a small tree and you're missing the forest ahead. When we look across the global macro backdrop, we're still not seeing any evidence of stabilization, let alone improvement in the global data. So the latest round of PMIs, for example, are still showing signs of further weakness in the months ahead. The forward-looking indicators, things like future orders, employment sub-indices, they're all still falling. And even last night, we had the US ISM, which actually fell to outright contractionary levels. So given that the data is still deteriorating and that the geopolitical risks out there are actually escalating, not decreasing, we still think that investors should be very defensively positioned, and the medium path for yields is still lower yet.
Can you give our clients some examples of how PIMCO are positioning our portfolios to both generate income and preserve capital?
Absolutely. So as I mentioned, we've still got a very defensive outlook and hence positioned that way in our portfolios. So structurally, we're a little bit longer duration, particularly in markets with positive yield environments such as the US and Australia, given that there's still scope for those central banks to cut interest rates further. We've also got a bias for yield curve steepness in the US, which would work if the Fed were to become a bit more aggressive in cutting interest rates. We're also a bit more cautious on credit, so we've been reducing credit risk overall, but we've been really diversifying that spread-related risk across different sectors. So having smaller bets, but across a wider range of spread instruments. So things like securitized credit, RMBS, very high grade spread product in Australia, like SSAs and semis. That helps to maintain carry in the portfolios, but at a time when we can reduce overall credit risk. And obviously there are still opportunities in FX and volatility sales that we can add carry to our portfolios.
Now Aditya, there's been some headlines around negative yields. Can you give our clients some simple talking points on this topic?
Absolutely. So I guess investors have to think about, what's the purpose of negative interest rates globally? And really the primary aim is to really penalize savers and to stimulate consumption and investment. That's the primary aim of negative interest rates. Now, luckily, we're not at negative interest rates in Australia. In the US, we're still some room to go. So in terms of local portfolios, all of our investments are in bonds which are still positive yielding. Even offshore bonds which are once hedged back are still positive yielding. So it's not a problem that we've got to think about right here, right now, but certainly something that's on the horizon over the next couple of years that we have to take very seriously as a risk. So from a PIMCO portfolio construction point of view, again, we come back to our 5 pillars of risk and risk factors that we use to add yield, to add carry to our portfolios and make sure that the overall yield of our portfolios is well in positive territory. So that's obviously things like duration, positioning on the shape of yield curves, on the movement of yield curves, spread-related risks, as I mentioned, foreign exchange, and volatility sales as well. So if we can harness the best ideas across our global portfolio managers in each of those sectors, we can still maintain a positive yield for our products and generate positive income for our clients.
Thanks for your time today, Aditya.